Welcome. I'm Russell Flannery, editor at large at Forbes. Today we're talking to Chen Zhao, the chief global strategist at Alpine Macro. Alpine Macro is a Montreal-based investment research firm. Welcome, Chen. Thanks for being with us today. How about if we start off, you tell us a little bit about yourself and how you got interested in China investing.
Thanks, Russell. I'm Chen. As it's pretty obvious, I look like a Chinese, and I was China-born economist, brought up in China. I came to the United States in '88 to do my PhD program. Actually, was sent over by the World Bank. At the time, there was a UNDP program, United Nations Development Program. But anyway, I spent about 2 years in the U.S. and then I moved to McGill University, which is in Montreal, to continue my PhD study. And at the time, I think it's the early '90s, China was just opening up, it was booming, and there was a gentleman who owned a company called BCA Research, Bank Credit Analyst Research, and his name is Tony Beck, and he said, "Hey, we got to do something about China at the time." So he happened to find me and say, "Hey, there's a Chinese guy seem to be able to speak English and know a little bit about Chinese economy. Why don't we just get him and talk to him?" So that's why I got connected with the BCA. So, but anyway, and one thing led to the other. I was hired by BCA by Tony Beck back in '92 to create BCA's first China publication. That at the time was called the China Analyst. I was launched, I think in September '93. That was the first China-focused publications, investment research at the time. So anyway, that was '93, and then '98. There was Asian crisis, and then becoming emerging market crisis. Because a lot of countries basically falling apart: Brazil, Turkey, Argentina. But at the time, I said, "Hey, we got to do something about emerging markets." So that's when I moved on to create BCA's emerging market strategy. So actually, I effectively wrote two publications, China and emerging markets, simultaneously, all the way to 2005. So I don't know how I did it, but anyway, I did it. So two publications.
Yeah, congratulations on on all that success.
Yeah.
So you've been tracking China's growth, and
Not only
you've
that,
had a lot
not only that, but from 2005 all the way to 2015, I was BCA's chief global strategist. So I wrote their flagship global investment strategy. So basically, it's everything, anything. And then by 2015, I left BCA and worked on a buy-side firm called Brandywine Asset Management. So I was their head of research, co-head of research for 2 years, and then I decided that I'm going to create this Alpine Macro because, I loved what I did before. So that's where I funded Alpine, together with the ex-owner of BCA, Tony Beck, who hired me in the first place. So now we have like a 40 some people. We already have a big lineup of products. So we're growing, having a lot of fun. So that's who I am. Okay, if you want me to introduce who this guy is, this is who I am. Okay.
Yeah.
Here we go.
Yeah. Very interesting. Very interesting. And plenty to talk about when we have more time than we have right now. But of course, China's economy is really a focus of a lot of global attention today. What do you see happening there?
Two big problems in a nutshell. At the macro level, China is dealing with a situation where aggregate demand is grossly inadequate. Okay? Meaning that they are dealing with a very serious oversaving problem. Okay? On the micro level, the Chinese economy is dealing with a confidence crisis. Okay, this is a serious crisis because entrepreneurs, private investors, and private business peoples have lost confidence in policy, in Beijing's ability to steer the economy in the right direction, and that is the essence of the problem. I would say two big problems.
So I just came back from a couple of weeks in China, and I think you don't have to drive very far down the road to be coming into contact with the property market downturn. How bad is that, and what does that mean for the banking system?
I think part of that property market implosion is policy induced, and part of that implosion come from the fact that the structure of the economy has already shifted. Okay, what do I mean by that? You probably understand President Xi Jinping, he has always said, property, the houses are for living, not for speculating. They superimposed so many non-market restrictions on how people can buy houses, how people could lever up, and things like that. That actually helped to cool down the market, but that is a non-market. That's a non-market measures. Now, these very brutal restrictions now coming together with another forces that are at work, which is the urbanization process in China, which was the driving force behind the housing boom, has matured. Most of the laborers are being absorbed, all this cheap labors, migration, they have basically largely down. So all of a sudden, you are dealing with disappearing housing demand. So you got a lot of a supply, huge restrictions on how property can be bought and sold. And at the time, of course, property prices are very high relative to the income, and then a sudden withdrawal of housing demand. So all this thing created a perfect storm for the housing market. That's how I characterize this problem.
So now what about the banking sector?
Well, if, everybody was worried about Country Garden, right now, if you look at their debt is trading at about 7-8 cents on the dollar, basically saying, the market is saying that company is not viable, okay? So Country Garden is one thing, and there is the trust companies, because right now the problem here is that once you have a nominal economic growth that is decelerating very quickly, all of a sudden, all this trust product, wealth product becomes problematic because they all levered on nominal growth. If your nominal growth becomes too low, they can't fulfill their obligations. They're all starting to default. So when that happens, usually the banking sector usually is in trouble if you run a full-fledged market system. But fortunately or unfortunately, they're not running a full-fledged market system. Okay.
Yeah.
So what I'm trying to tell you, lots of people concerned and ask us, whether China is going to face a Lehman moment. I think Lehman moment, of course, that's a fair question. Lehman moment, Lehman is an independent commercial concern. If you got a balance sheet problem, sorry, you could go under. But the problem in China here is this: the state-owned banks are not banks. Their balance sheets are connected with the central bank's balance sheet. So any solvency problems or liquidity problem, they will receive automatic bill from the central bank. So that's why I'm saying there is no way that you're going to have a Lehman type of collapse in the Chinese banking system. So
now what?
Crisis, go ahead.
I was going to say then, what about the currency into this kind of environment? That's that's a contact point for a lot of investors, the currency depreciation.
Yeah. I think, as I said, the crisis probably take different form. It's not going to be a collapse, like spectacular decline or collapse in financial system, seized up. That's not going to happen. but it's going to be slow implosion of economic growth, and the currency is a key pressure relieving valve. If you look at the Chinese currency, it dropped very sharply in 2015 when the whole world was concerned that China was the next shoe to drop. Remember that episode that caused a collapse in oil prices? The Chinese currency went to about 7.3, 7.4, something like that. But right now, we're retesting that territory because the Chinese government is clearly very, very concerned, very worried that this thing is going to go into a chaotic decline. That's why they are instructing their banks to actually shore up the demand for the local currency. The bottom line, with all this lack of policy response, with all this decelerating growth, with all this property market problems, asset value going down, I cannot see how possible the currency is not going to weaken much more. So
Yeah.
I think the Chinese government would like to see an orderly decline too, because their export is imploding. Export dropped by 15, 16, 70%. That's a huge cliff drop. So you cannot have a strong currency, but they are concerned that they have a climatic decline that actually destabilize the economy. People could be getting very angry if you have a dollar. If you have to convert your currency to dollar if you go to travel abroad and things like that. People get very, very angry. So I think they're just trying to manage the decline, but I cannot see the Chinese currency won't go down. It will go down.
Yeah. How far do you think it might go?
I don't know, 758 is all possible because that's really dependent on whether the Chinese government can come up with very forceful, large scale, decisive policy reaction to what is going on. So far, they are reluctant. They continue to refuse to take very dramatic actions. That worries me.
So we're still talking about the world's second biggest economy here. Still lots going on over there. Is China investable? How should investors be looking at China today?
There are definitely an extra layer of risk premium for the Chinese stocks. The reason for that is, of course, when you have an economy that is going down, when you have the economy going down, that's going to shave your earnings. Usually stocks are not going to do well. It's going to go down. But for China, there is an extra layer of premium. What is it? What is a geopolitical risk premium? You got this China-U.S. I wouldn't call that confrontation, but it's the geopolitical strife between the two countries is going to get worse, and then there are a whole bunch of restrictions on the inbound or outbound investment bilaterally. You don't know what will come up next. Who knows? I mean, I don't know. The Biden just put a bunch of new restrictions, and China will probably retaliate. So there is extra layer of risk premium here. So I don't think, I don't know how to evaluate the Chinese assets at this point, because it is not a pure commercial and business or economic parameters you have to put into the equation. You have to involve a whole bunch of non-economic, non-commercial factor into it. I don't know how to quantify that. That's why why do I bother? That's my attitude.
Yeah.
Why bother?
Very interesting. Well, thank you very much for joining us today, Chen. It's been great to see you here.
Thanks, Russell.